Hi everyone, a very good evening to you. Welcome to my channel. Today we're going to be discussing about candlestick anatomy. Okay, last week we were able to understand how to read the price from the chart. We took a very strong note of the Euro USD pair, where we're able to identify how you're going to read from the right hand side, also how you're going to identify your time frame, and how you're able to understand the dates that is stated just below the candlestick chart. Now, I was going to ask a simple question. We have the buyers and the sellers that are in the market. As a buyer, let's assume you're a buyer today. You want to invest in a particular commodity or a pair. Would you rather buy low, or would you rather buy it when the price is high? Of course, it's an obvious rhetoric question. You want to buy when the price is low, right? So you want to buy when it is low because you're anticipating that after a particular time the price will rise and then you're going to make profit. That is it. That summarizes what we're doing here. Now, looking at this candlestick, the green one denotes the buyers, or the bullish momentum, or an appreciating trend. What do I mean by an appreciating trend? When you have the price at which that commodity opens being lower than the close, it means that is an appreciating trend. If this, for example, JPY opens low at $10, after 4 hours, just in our case we're dealing with 4 hour time, at the end of 4 hours it's closing higher at about $50. That means it's an appreciating momentum or an appreciating pair. Conversely, when you're looking at the sellers or perhaps the bearish momentum, the open is usually below the close. So that means it's open at a higher price and closed lower than it opened. That means if this commodity opened, let's say at 8 a.m. in the morning, it was selling at $100. Then after 4 hours, just like we said, we're looking at 4 hour time frame. At the end of 4 hours, by 12 noon, it started selling for $70. That means the open, it's now lower than the close. That's exactly why we designate that as a typical depreciating candlestick or a depreciating momentum. So in other words, the green ones, where you have the open means it had gained about 40 points within the specified time frame you're using. Just like I said, in our case, we're using 4 hours. That means if this candlestick had opened at, this commodity had opened at 8 a.m. and is sold for $10 at 8 a.m. in the morning, that means, going by the fact that we're using a 4 hour time frame, by 12 noon in the afternoon, this should be priced at 50. That means it had appreciated from 10 to about $50 within 4 hours. So if you by chance decided that, okay, I'm going to use like 1 hour, that means if this had opened at about 8 a.m. in the morning, then by 9 a.m. this candlestick would have formed, because it's going to give you a clue. So these candlesticks, going by the fact that we're using a 4 hour time frame, this candlestick form at the end of each 4 hour period. Okay, if you're looking at this within 1 hour time frame, that means for the entire duration you're going to be having about 24 candlesticks if this is to be 1 hour time frame. But since we're using a 4 hour time frame, for the duration of the day you're going to be having 6 candlesticks forming. Okay, I hope that's clear enough. Now, someone will going to ask you, as a buyer, would you prefer to buy high or you want to buy low? Of course, it's an obvious rhetoric question. You want to buy low because you believe that once you buy low, there's this tendency for the price to go high, then you're going to appreciate. Just like people buy off properties, they tend to want to buy it low. The same way, when you want to sell it at the highest price, you want to sell it to the highest bidder, so that yes, you're making good money from your sale. That's the same way, the same format happens in the FX market. I'm going to prefer to buy at this point, because this is the open price. It opened at about, if you take the reading to the right hand side, let's say this candlestick opened at $60, because we're going to trace it to the right hand side. Remember, I said this is exactly where the points are stated. The numerics tells you what the reading of the price is at each particular time of the day. So it's reading about $60. Then at the end of 4 hours, it closes at this point. This is the close. It closes at this price. Then you trace. Then having traced here, it's just below 150. That means it's probably about 130. So it had ended at 130. So at this, within 4 hours, this commodity or this pair, Canadian dollar JPY, has appreciated from $60 to about 130. So at this point, I want to buy here where the price was still at $60, because it's going to appreciate to 130. So that's exactly what happened. So after 4 hours, the price went to 130. Then that candlestick formed. Then the next candlestick formed the next 4 hours. So from 8 a.m. to 12 noon, the price was at 130. Then from 130 to 130, within 130, the price touched it went to a high of about $200. The price actually went higher to $200, but unfortunately, it dropped. The price fell down. Perhaps there could have been some triggering events, could be some kind of breaking news that prompted seller to sell high at this point. So the sellers came in and said, okay, no, at this point, this is now being priced so high. Let us begin to sell some of our CAD JPY. So they started selling at this point. Now they sold. Look at what happened at the close. Remember our close of the bearish candlestick here. Now we closed lower at about let's say maybe 140. The next 4 hours it closed lower than 140, and the subsequent 4 hours it closed lower. That means 4 hours, 4 hours, 4 hours. That's 3 of the 4 hours, which is 12 hours. Within 12 hours, this price have moved from about 200 down to this point. From 200 down to this point. This point, when you take the reading, could be about, let's say, 65. So it has lost about 135 points within 12 hours. Remember, just like I said, this is a 4-hour time frame. So now, having settled, let's say at some point within the day, that 4 hours, at this point where it was 65, now the buyers came again and said, oh, this price is now low. Can we now begin to invest? Can we now buy now, hoping that it's going to rise again? So at this point, you want to buy here, because having bought here, you're buying low. The price actually went up. Then at 65, then the next 4 hours is sold higher at about 110. Then after another 4 hours, it formed another candlestick. So it went higher to about 180, having taken the reading from the left hand side. That's exactly what happened. You could also look at the same condition applies for the commodity I've highlighted below. That's Great British Pound JPY. Okay, the price actually opened here. After first 4 hours, it closed below. Look at open and close. Opened higher, closed lower. Opened higher, closed lower than the previous one. Also closed again lower. That means it has been closing lower than the previous. It had been depreciating in value within 12 hours. 4 hours, 4 hours, 4 hours. Within 12, it has lost a total of course, you must have checked from your corresponding numerics to the right, percentage, your pips. So now at this point, the buyers came again and started buying at this point, because the price fell down to as low as 50. Now, if you buy at this point, of course, you're going to be making money, because the price actually appreciated. it closed at about 210. So within this point, you're gonna be making, let's say, $160. That's exactly what happens. Now, then how do you do the exchange, the mathematics? At this point, let's say where the first candlestick in the morning, I think it opened lower here. When you trace it, it's about 120. What this is telling you, at 8 a.m., let's say at 8 a.m. in the morning, you came in and saw this candlestick forming here. It's the price of one Great British pound exchange for, when you take the reading here, to about 120 Japanese yen. Okay. Now, if I take I have about £2 to sell in the market. If I have about £2 to sell in the market, that means my £2 will be fetching me 120 by 2, which is about 240 Japanese yen. Okay, that's exactly how it is read. The same vein with Canadian dollar JPY. If I want to take the reading, what's the current price here? I see that, oh, this price is so high at this point. I take the reading here, it's about 180. That means 1 Canadian dollar is equal to about 180 JPY. Now, if I take let's say 3 Canadian dollars, 3 Canadian dollars will be giving me 3 times 180. Then I'll be exchanging my 3 Canadian dollars for about 540 Japanese yen. I hope this was able to clear our doubts, and we actually understood the points that was highlighted here. By the next class, we will now be I'm going to explain to you how you're able to download the MetaTrader 4 app, so that you're going to see this play out on a live real-time basis.